we're going to get started. Welcome to the Jitasa HANO webinar series. The topic for today is best practices for creating your 2015 organizational budget. As an FYI, the way the webinar is set up is we have everyone on mute. And that's just to kind of help with the kind of flow of the webinar. But we do want to make it interactive. So if you have any questions along the way, feel free to enter those in through the questions window, which I'll be monitoring, and I can answer those questions as we go along. I'll also get questions throughout the for every webinar if we're going to be sending out PDF slides or copies of the PowerPoint or a link to the recording. We will be doing that as well. Also in the follow-up email probably tomorrow or the next day with a link to the slides and any follow-up information you need. So feel free not to have the need to take too many notes. Just kind of listen and learn, and you can always follow up with those detailed documents later on. Okay? So with that said, the presenter for today is myself, Ron Kwok, the Director of Marketing and New Ventures for Jitasa. And so what I'm going to be sharing today is the best practices we created as far as putting together organizational budget. And the best practices come from actually the process we use to develop the budgets for our clients. And so I'm going to walk you through what that looks like and share those best practices with you. Hopefully be a very educational webinar. To kind of just give a brief background on who we are, we'll talk more about that later towards the end. Jitasa is the first and largest finance and accounting service provider that's exclusively serving the nonprofit sector. And so we currently serve hundreds of nonprofits, across the nation, including a few in Hawaii as well. And some of our clients are listed on the page in front of you. And we serve clients all the way from, or nonprofits all the way from large federations to startups in every sector. And so I think what that brings to the table for us is the ability to put together not only stellar service to our nonprofit clients, but then also bring together those best practice learnings, those approaches and methodology into educational webinars such as this for valued partners like HANO, and to really hopefully help benefit you as you run your nonprofit to put in place best practices from a finance and accounting standpoint. Today's lesson plan, we're going to cover over a few quick topics. We're going to quickly talk about why budget, what's the purpose value behind it. But then spend most of our time really talking about the approach and highlighting helpful tools that you can use throughout the process. We'll actually walk through a budget process using kind of like a case study for one of our clients, and we'll kind of do that as we go along with the approach and tool section. We'll highlight a few bonus topics if we have time, and then we'll wrap up with some promotional offerings we have around our budget. That hopefully be a nice free service to you, along with the ability to sign up for our budgeting service if that's of interest to you as well. Okay? So to talk about the first topic as far as why budget and what's the purpose behind it, right? I found this great like content or explanation as far as why you should budget in a good old accounting textbook called Principles of Accounting, Chapter 21, budgeting, planning for success, right? And so what they talk about, if you kind of quickly read through what's in front of you, it's a lot to take in, but we'll just highlight some of the key parts, is, that budgets don't guarantee success, but they do help avoid failure. They talk about how it's an essential tool to help you plan specific action-oriented goals, how it's good to bring together large organizations that can kind of work together, and probably a lot of things that you always kind of already know. And it's helpful when things don't go as planned. It's a great tool to help you identify and focus on why you departed from the plan and what you can do to kind of get back on course from that plan, right? So probably a lot of you know already, which is probably why you signed up for this webinar or why you're going through the process for your nonprofit for the next year. I like to keep things simple, so I think probably another way to sum it up is in the famous words of Yogi Berra. While he's not an accountant, he is a Hall of Fame catcher, and I think what he shares as far as his wisdom in life applies very well to this process. Yogi Berra says simply, if you don't know where you're going, you'll end up someplace else, right? And I think for a lot of us, whether we're, in the finance manager or director of finance role for a nonprofit, whether we're an executive director or leader of any organization, I think that really sums up the reason why you want to plan and put together a best effort in planning, right? So it may not be 100% accurate, but it'll be a good guide to hopefully help you get to where you want to go rather than have you end up somewhere else that you had no plan on going to, right? So I think sometimes the simpler words explanation say it the best. And so thank you, Yogi, for passing on those words of wisdom. Right. So as far as the approach and helpful tools, we want to kind of highlight, first of all, where the operating budget fits into like a nonprofit planning cycle. My background, for those coaches, I'm not an accountant, but my background is in business planning, is in marketing, in building strategic plans, not just for nonprofits, not only for Jitasa, but also for like large corporations as well. And part of what we've done throughout that planning cycle is, we followed a three-step planning cycle that starts with a strategic plan that dovetails into an operating plan, and then finally the operating budget is a reflection of all three, right? And so, one thing we would kind of recommend is that the operating budget isn't necessarily your starting point, but it really should reflect the plan you have in place for your nonprofit as a whole. And kind of like the way to look at these three components in a simple way is something like this, where your strategic plan is something that you'll want to put together, every 3 years. And there's like it has a multi-year horizon point of view, right? So you put it together every 2 to 3 years, depending upon what's changing and what's changed within the nonprofit or the dynamics of where you're serving, things like that. But it's more of a long-term view of goals and strategic intent or vision or mission that you want to accomplish as a nonprofit. And you highlight at a high level, how you're going to get there, right? So a good layout for the plan may be kind of where you stand today, what's an assessment of your current organization, talk about maybe the intent or the goal or the vision you want to accomplish, and then steps or initiatives or big plans or big picture plans and how you're going to get there. Then your operating plan is something that you do on an annual basis that has a 1-year horizon point of view. And that's more of, okay, if you break down your plan for a 3-year horizon, you have ideas of your final goal, you'll have a good sense of what you need to accomplish each year to get to that vision or strategic intent. And so your operating plan is kind of more of a detailed plan that talks about for your next year, what are the key things you want to accomplish to grow your organization and move you in that direction of achieving your bigger vision, the strategic intent you have outlined in your strategic plan. And so again, that's more on an annual basis and a 1-year horizon. And these are things that are great to develop with your leadership team, your management team, and then along with your board. And then finally, the operating plan is the third component. And if it's done right, it should flow and reflect everything you have in your strategic plan or operating plan. So really, it's your financial budget that's going to support the accomplishment of your plan. And so if it's thought through well, the operating plan should provide input that you need to create your updated revenue view for the next year and your updated expense view for the next year. And that operating budget is done on an annual basis and has a 1-year horizon. Okay, so I think that's kind of something that's good to give the context of like where this fits into the bigger picture. And my guess is probably a lot of you have gone through different stages of all these, but hopefully this kind of helps kind of lay out how they all fit together and how, more importantly, this budget fits into the bigger planning cycle for your nonprofit. So when you go through the budgeting process, and for now we'll assume it's for the 2015 organizational budget, we recommend kind of a 4-step process. The first process is, it's important to start with your 2014 baseline, right? So oftentimes, like the past is a great predictor for the future, and it's good to learn from your prior year history or your previous years of history. And so, as much as possible, unless things are very different, it's always good to start with a 2014 baseline of what you've learned, what's applicable. And then on top of that, as you build a 2015 plan, you're going to want to make adjustments, whether it's positive or negative, to that baseline based upon things that are fleshed out in your operating plan. And so, we'll talk about it in a little bit. But whether it's a new initiative, a new program, a new revenue income stream, right, or you're going to cut back on something, like those are things that may be detailed out in your operating plan. And so those are puts and takes you want to put into and reflect into the budget. So as you start outlining and thinking through all those different positive and negatives from the baseline, then you're going to want to input it into a model. We'll show you how you can use a very simple Excel budget model to kind of capture all the inputs and then roll it up into an operating budget. And once that's done and once that's vetted and reviewed and you feel comfortable with it, then you're going to want to review and sign it off with your board, right? So present it to your board and get sign off from them. And we'll talk about some best practices in that towards the end of the webinar. Okay. So some helpful tools along the way are obviously your operating plan for 2015. So it's always good to have met with your management team or your board and have assembled that. And it could be anywhere from a very simple 1, 2, 3-page Word document to an elaborate PowerPoint. Really, there's no right or wrong, but whatever is appropriate for your organization, right? Have the main points identified through the operating plan and ready to be leveraged in building your budget. I think it's always helpful to have a financial dashboard. I think it allows you to really look at your numbers in a more kind of investigatory way, in a way that reveals a lot more information than just pulling up financial reports from QuickBooks or your accounting system. And we'll show you how that can help you in some case studies. And then lastly, you're going to want an Excel budget model. We have some nice templates that we use for our consulting process with our clients that essentially allows you to identify your reoccurring, your one-time, and then it rolls it all up into a summary budget that you can then put into your accounting system. Okay. So let's walk through that process in more detail, and then we'll highlight some examples as we kind of go along the way. Right. So when it comes to starting with the 2014 baseline, the first step in the process, there are kind of two key areas you want to look at. The first one is your 2014 actuals. And when you look at your actuals, it's good to focus on items that are a significant percent of your budget, right? So you're going to have different revenue categories, different expense categories. And we always say, spend the amount of time or energy in areas that warrant that time or energy, right? So if you have an expense category that is 60% of your budget, right, and maybe salary is an example of that, versus another category, maybe like office supplies that are like 5%, right, you're going to want to spend more time and energy in your salaries and your wages and the staffing, right, because that's really going to move the needle and help you hit or miss your budget much more than something that's like 5%, such as office supplies, things like that, right? So a good dashboard will help you identify the big, large bucket items so you can focus your time and energy in that area. And then another good baseline to look at is your 2014 budget versus actuals. And in the same way there, you're going to want to focus your time and energy where the variance is significant, where what you budgeted was very different than your actuals, right? And really spend the energy trying to figure out what happened and what caused that variation so you can plan better the next year. Okay. And I think a great tool that can help you do just that is a dashboard, right? So I kind of alluded to earlier that, a dashboard that's dynamic, that can really help present numbers through trends and pictures, can give you a lot better understanding or the ability to quickly understand what's going on with your numbers in a way that a typical financial statement from QuickBooks or an accounting system, your typical report, can't do. And so, we have a financial dashboard that we use, that we build for our clients, and we use this during the budget process because, as I'll share in a little bit, it really does help numbers pop and help you identify what's going on within your nonprofit. So, we have dashboards that are financial, that have programs, that have funding information. This one for the budgeting process, more on the financial side, but you can dive into activities, financial position, expenses, budget versus actual trend. And as I'll show you in a little bit, it can really help your process, your planning process come alive and bring some new insights to the table. So if you were to click on the Financial Activities tab, one thing you may want to look at are your prior year actuals, right? And so, let's say you run through the entire year and you look at the last 12 months and you look at your numbers from January to December, right? And so this picture here shows you your total income, your expenses, and your net income for that select time period. Not only are the totals highlighted in front of you, but you can tell from the green and the red and the orange line, like what times did you have a positive net income for the month, or did you have a negative net income for the month, and then how did that move up and down throughout the year? So looking at this picture, things quickly pop, and you begin to see the kind of the rhythm of your nonprofit, what's taking place. If you were to look at a 2-year, 3-year view, you can see patterns begin to develop and emerge as well, right? So this is a great way for you to have a quick macro view of your nonprofit's financials for the last year and begin to see what's going on. I mentioned earlier that you want to spend your energy and time in areas that warrant your energy and time, so in the high percent categories. So a good dashboard will allow you to not only look at your income statement and only your income statement here, so we've eliminated the expense and the net income from the view, but also gives you a breakdown whether it's in a view like this or percent numbers that highlight which of your key categories make up the highest percent of your revenue. So in this picture, you see how income is going up and down over the course of the year, but you can also see that revenue from non-government grants for this nonprofit, ABC nonprofit, is 69% of their revenue stream. And then the revenue from direct contributions is another 30% or 31%. And the rest are pretty small, right? So what this tells you is unless things are going to change next year, unless you have different plans, like when it comes down to budgeting for your nonprofit, you're going to want to spend your energy and time analyzing and predicting the revenue streams for these two categories and less on the other sources, donated goods, investments, special events. Right? Okay? So a good dashboard will show you kind of where to look and where to focus your time and energy. And so if you were to go on that dashboard, and on the previous slide, it showed income, and the filter by category showed all. If you were to change that to non-government grants, because you want to look at that area first, if you notice from the previous slide, this showed you everything. But if you were to change that drop-down arrow, it would only show you the income from non-government grants. And now you can see how that's been moving month to month. And then also below, you can see the breakdown of the subcategories for those non-government grants. So you can see that 428,000 of the 684 came from nonprofit organizational grants, and then 256 came from foundation grants, right? And so now you begin to understand, in a very simple picture, your revenue streams, what encompasses each one, and hopefully I should help you plan better for next year. And so what we'll typically do through the process is begin to analyze the client's revenue streams or expense streams from the prior year, and then start breaking it down and start having discussions with our clients. And this can be something you can have with your team, and start talking to them about, let's start talking about the timing, and let's start discussing of these grants, like which ones are reoccurring versus one-time. So understanding the timing and the flow of that. Start talking about, are there any trends, are there any grants, key grants that you expect to either increase or decrease, or larger revenue or revenues that you plan to increase or decrease over the next year? And then are there any new revenue sources that aren't present here that we want to talk about? So for example, in the previous slide, Most of their funding came from non-government and direct contributions. Like very little came from special events, if at all, nothing, right? So, but if in the operating plan, if the nonprofit identified, hey, special events are one thing that we want to start putting in place and start running and start building up, then that should be fleshed out during the operating plan, and then during the budget, you identify that as something that you need to begin to roll in and put into the budget and start talking about the timing, the amount, things like that, right? So hopefully this kind of explains how a point of view like this can help you understand and break down your prior year income and start highlighting some good conversations to have. In the same way, if you look at your expenses, right, a dashboard will allow you to go from income to expenses. You want to show everything, so take off any filters, and now you begin to see your expense movement year to year. And the breakdown shows you here, no surprise, that for this one, salaries, which is in orange, makes up 40%, 38% of their expenses. And grants, contracts, direct assistance make up 46%. And then in a far third is facilities and equipment expenses, and the rest are pretty small, right? So again, you begin to understand that you want to spend most of your time in your planning in these two areas, maybe in this area, and the rest of them, unless there's like not a lot, unless there's something that's going to change in that area, you can spend less time in those areas because that's not going to move the needle as much for next year. And so if you were to filter by the category regarding expenses and go from all and just look at the salaries and related expenses because that's your second one, then you can begin to see that, that expense stream is pretty flat or consistent month to month. There's not a lot of variation. So in the previous picture, a lot of your variation probably comes from other categories. And then also, if you do a breakdown of your sub-accounts, you begin to realize that, again, no surprise, salary and wages make up a large percent. Your benefits make up a certain percent, and then so on and so forth, right? So benefits here about 20%, payroll taxes another 10%, right? So you begin to kind of understand the math and the numbers, and it'll help you plan next year. And in the same way as you did before on the revenue side, when you start going through expenses, you want to start having discussions around the timing, what's reoccurring versus one time. Like an example of that could be for your employees, which employees are salaried and consistent throughout the year versus do you have any seasonal employees that come in at certain times? Or if you talk about trends or impacts, do you have any new hires you plan to make to support a new program, a new fundraising event, et cetera? And then how is that going to fold in, right? So what we always do is kind of talk about the prior year, highlight some key call-outs, and then begin to flesh out some of the things that are going to change for the next year. Okay? So that's an example of how looking at your prior year's history can be a good guide and help you in the planning process. Another good thing to look at, as I mentioned earlier, is your budget versus your actuals, right? So the same dashboard that we have can quickly highlight your budget versus your actuals. And so if your budget's loaded into your accounting system, it's easy to track the performance against that for the last year. And so this one will show you over that 12-month period. The green is what was actual, the gray what was budgeted. And you begin to see that there were some places like in September they were spot on, this example, but then the next 3 months they performed better than expected, and the last several months performed worse than expected, right? So it's good to have a conversation with your staff about like what happened there, right? What was the cause for those variances, and what were some lessons learned? You can always filter by the category and just show some subcategories and see where you missed more. And maybe you might find out that you were pretty good in 3 of the 4 categories. But in your 4th one, because it was new, let's say maybe you had special events for the first time, right? That was more of a bigger miss because you didn't know what to expect, right? So hopefully if you look back into why you missed your predictions earlier or your forecast earlier, it'll help you predict better this time around. Okay. So hopefully that was some good examples of how to use your prior year's or your current year's 2014 financials as a baseline to help plan for next year. And so once you understand your baseline, then you want to really begin to dive into any adjustments you need to make to that baseline based upon your operating plan. And I already kind of highlighted some of those examples early on. We kind of do that process together with our clients. It just kind of flows well that way. You can always separate it if you like. But kind of the idea is when you make adjustments to the baseline, so you're kind of using last year as your starting point, and then you want to do positives or negatives or puts and takes based upon your plan. You're going to want to increase either your income or your expenses or both for any new initiatives, new programs, or activities that are starting or that you're ramping up, right? Obviously, if you're starting a new fundraising campaign, that's not only going to allow you to, project or budget more revenue, but there's going to be expenses lined up with that. If you're going to launch a new program, the same thing. In the same way, if you plan in your operating plan for whatever reason to discontinue or scale back an initiative program activities, you want to begin to capture the financial impact of that and then begin to reflect that in your budget. So if you're going to cut back in a program, think through, well, okay, what does that mean for staff? What does that mean for vendors we use, support, infrastructure, things like that? And then lastly, you're going to want to account for any expected upward or downward trends that you may know is coming. Hope this doesn't happen, but let's say we hit another recession, right, like we did in 2008. Going into that budget year, 2009, probably a lot of nonprofits knew that was coming, and so they scaled back the revenue that they expected for that year because they knew donors wouldn't be able to give as much as they did before, right? So, or if you know that a grant is going to run out, reflect that in your numbers. Or if you plan to apply for grants, or you have a few that are close to coming in, and you feel confident about it, then you begin to kind of reflect that in your trends as well. Okay? And so what that looks like is something like this, where in front of you are a few, it's like a very simple discussion guide that you can use to help you incorporate your operating plan into your operating budget, right? So as we talk to our clients, this is kind of a guide that we use, and feel free to use this with your team as well, where you want to first start to talk about any new initiatives that are planned for the year. So whether it's a new program, a new funding revenue stream, or any new support infrastructure you need to build out. What that last bullet could be an example of would be, let's say it's time for you to build out a formal finance organization or a formal HR department, right? Or formal fundraising department, right? Those are things, for example, that you're going to want to put in that last bullet. Or you're going to move into a bigger facility or a new facility, right? So those are things that you reflect in there. And then question 2 in your discussion guide is, once you identify any new programs or any new funding revenue streams that are going to be put in place, then just begin to go to the next layer and think through, okay, what are key activities or hire or spendings that we need to do to make that successful? So if you know you need to launch a new program, what are any staffing requirements you need for that new program, whether it's increasing your current staff time and the hours, or hiring new staff, or using contractors, consultants. What's needed to build that out? What are funding that you need to bring in related to that, and what can you expect? What are external partnerships you may need to build and the costs associated with that? And then lastly, what are any required support or infrastructure you may need, whether that's additional laptops, more hours from your HR staff, payroll processing fees, things like that, right? So you can begin to kind of identify, and if you kind of come up with a nice checklist, it'll make sure that you kind of think through all the implications for those new initiatives. Topic 3 is where you talk about any areas or plans where you plan to discontinue or scale back. So one is really any new initiatives, and question 2 is a follow-up to that. The next thing always to talk about is what are you going to discontinue or scale back. And once you identify programs or funding that you're going to scale back in or discontinue, think through in question 2 again, like any impacts it has on staffing, funding, partnerships, infrastructure. And then lastly, what are any expected up or downward trends to revenue streams that you expect, right? So, write these questions down, begin to sketch out or write out in bullets like what some of those impacts may be, and use that for notes as you build your operating budget in your Excel model, which we'll talk about next. Okay? Cool. So the third step of the budgeting process, once you've built your baseline, once you identify positive and negative adjustments you need to make based on your plan, is to input that into some kind of model that's going to help you do all the math and bring all the numbers together, right? And the goal of that model is really to create a best guess of reality of your monthly revenue and expenses. And so just like we talked about before, you'll see that we organize the worksheet and the Excel model to follow the flow of 1 and 2, where you start with a baseline of expected reoccurring spend, and oftentimes that can be pulled from your current year. You layer in any expected one-time changes that are going to be varied month to month, and then you layer in new initiative programs or significant changes. So what that looks like, if you have a nice model in Excel, you can use the power of Excel to do all the math for you. So it's going to be hard to see, but if you look at the bottom, you'll see some of the tabs that we have in Excel in our model that we use for our consulting process, where you have a summary budget that's shown in front of you that brings everything together, and it shows you your total revenue, your total expenses, the increase from last year, actual increase from last year's budget, the trending, percent total, and the numbers, right? So it's a great summary, great way to look at your budget as a whole. But then next to it are worksheets that are used to do all the heavy lifting. So you have a monthly detail worksheet, which we'll show you in a little bit, but that breaks it down by month. There's a reoccurring worksheet that you use to lay out all of your reoccurring spend and just list that out in detail and what you expect for each one. Then there's a one-time of any worksheets or any expenses revenue that you don't plan to have come in every month, but it's going to come in, whether it's lumpy, like once, like only in January, or every other month, or every 3 months. And what you're going to want to do is your monthly detail is going to be your recurring plus your one-time, but it knows which month things are coming in, and it brings it all together into monthly detail. So what that looks like, for example, is this Excel model is our reoccurring revenue and expense worksheet, right? And so there's a section for revenue, there's a section for expenses. This is lined up to the chart of accounts for our clients, which is the standard chart of accounts, the UCOA chart of accounts that makes it really easy to build these templates for. But they have in here your main expense categories, and then the numbers, the totals for all of the reoccurring ones. So the way we've done this, for example, is your salaries and related. For this one ABC nonprofit, they have expect $300,000 in total salaries and wages. And they know that $21,600 is going to come in every month. And that was a baseline they used from 2014, right? So we're assuming that 2014 is a baseline. And if you look at it, it was consistently $21,600 happen every month. But they also knew when it comes to new trends that they were going to give some raises to some key staff. So that increased it by $333 each month, and that was reoccurring, so it's on this worksheet. And they also knew that starting in January, they were going to hire new staff. That's going to increase their salary by $3,000, right? And so here's where you begin to list out like all the reoccurring spends, and you can do it for each category and begin to put in the amount and some comments and some notes. And a best practice tip, like I mentioned before, is to populate this with last year's or your current year's baseline numbers or your current year's numbers and use that as your baseline. And that can help you kind of start quickly. And then what you begin to do is increase, add or take away any numbers that are going to be changing for this year. Okay? So that's an example of your reoccurring. The next example is of your one-time expenses. And so here is where you begin to identify expenses or revenues that aren't going to happen every month and be the same amount, but it's going to vary month to month. So an example of that is in their grants and direct assistance. So they make grants to other nonprofits. It's nonprofit ABC. And so in January, they're going to make a payout of $79,544. In February, and that's going to be to XYZ nonprofit. In February, they're going to make a payout of $162 to M&O nonprofit, and then they have one in March and other months, right? And so in the same way, they know for accounting fees that they have audits that take place, and they make payments in March and April, and that's $5,000 each month, right? So that doesn't happen every year, but that's a significant expense that's a one-time that they want to capture in here. So for your one-times, you want to enter the month it's going to hit the books. And so then what happens is, one we didn't call out on your expenses is some nonprofits are going to, you may want to allocate your expenses by program, fundraising, administration. And so the way we do that is we have a separate worksheet of allocations, and you can begin to allocate by expense percents that go to program, fundraising, administration. So in this example, program sales and fees, 100% goes to program, as opposed to salary and wages, 51% goes to program, 14% of fundraising, 35% to administration, right? So in this area, you can begin to allocate it, and then you'll have separate worksheets that bring it all together for each number, so you can see how it totals for program, admin, and fundraising. Okay? So once you've built out your worksheets for reoccurring, once you build out your worksheets for your one-time, then that monthly detail brings it all together. And so a good Excel model will be able to reference and figure out what to pull from the reoccurring and the one-time and where to put it in month to month. So the headers aren't showing here. Apologize for that. But this first month is January, February, March, April, May. And so the Excel model pulls it from the worksheets and does all the logic. And then you begin to see how much are you spending or budgeting in each main expense category, and how does it total month to month and at the end of the year. Okay, so, and then what does your net income look like? And so a good activity is to do the worksheets, go into the details, then step back and look at the bigger picture and see, are you hitting the targets you have in place from revenue, expenses, net income? If not, go back to the worksheets, make adjustments, or make adjustments to your operating plan, and then make adjustments to your budget so the numbers flow through. And then it's always good to take a bigger macro view. So again, like the budget model that we create takes a bigger picture and it goes away from those details on the month. But a nice picture can show you what your total is for each category, what it was from last year's actuals, what it was from last year's budget, the trending up and down in percent total. And I know in presenting to boards or your executive director, for example, oftentimes they're going to want to know, well, how is this budget increased from last year's budget, or how is it increased from last year's actuals? And then if there's an increase, what's the rationale, the logic, or justification for that to happen? Okay, so this nice summary tab brings it all together, and it's a great thing to show to your board and talking through your budget with them. Because they don't want to really see the details. They're going to want to see the high level and how it fits to the plan, the operating plan you built together as an organization. Okay. One last thing I want to call out in the process before we talk about presenting to your board. It's often good to incorporate some key ratios into your metrics. So you not only do you show the revenue expense numbers and net income numbers, but some boards may want to look at kind of cash flow predictions, or how much cash do you have on hand. Kind of a detailed way to do that is to build a cash flow model, but that's sometimes a lot of work. And a good short or quicker way to do that is to calculate your month's cash on hand with your new budget. And that will tell you how many months cash on hand do you have for the next year, right? So so the calculation for that is your cash plus receivables plus marketable securities divided by your average monthly operating expenses for the next year. And what that tells you is how long can you operate as a nonprofit if you were to cease receiving any donations. It's kind of like how much savings do you have as a nonprofit, or in a more personal way as an individual, right? And the best practice is you want to have 3+ months of unrestricted cash in the bank. So to apply this to your budget, what you want to do is figure out how much cash you'll have on hand when you enter into your new budget year. So what's your expected cash balance and receivables and securities at the end of December 31, 2014, for example. Then from your budget, calculate your average monthly expenses and do the math and see if it reaches the target number you are comfortable with. And I think this is a good metric to show. We had one client where we went through the process with them. We went through the budget, and we calculated a month of cash to be, I think, 2.8, 2.9. We presented the budget or they presented the budget and the month's cash to the board. The board came back and said, let's try to get to a 3.1 number. We feel more comfortable with that. Thanks for calling that out. And then the executive director went back, and then we looked at the plan, looked at the budget, and adjusted some areas to hit that target, right? And so, again, it's a good kind of summary number to show. And again, it's a good example of how ratios can help you in your planning process. Okay. So the last topic I want to talk about is reviewing and signing off with your board. So we talked about how you build a budget, and most nonprofits need sign off from the board. And so here's some best practices in how to do that to make it an engaging conversation, right? And so I'm not going to kind of show you, I'm not going to go through step by step. What I'm going to show you talk about more concepts or best practices in doing that. And there's 3 simple best practices when it comes to presenting to a board or any presentation. Hopefully, I follow that in building this together as well. And you kind of see some of those concepts being laid out in the previous slides. But there's 3 best practice tips. The first one is to focus before you flow. So plan before you start writing and know your story. Once you know your story, build slides that support your story, or build documents or pages that support that story. And then lastly, tell the story behind the numbers, right? Rather than show large spreadsheets or large financial statements, tell more the story of the number and key numbers and what's happening there. And hopefully that will lead to a board meeting where the gentleman or the lady on your board is not falling asleep on the picture in front of you, but they're more engaged and really active in conversation. So when it comes to focusing before flow, really the heart of the question you want to think about is, what is the story you want to communicate, right? And I think a great example of this is Steve Jobs. And if you look at any of his investor presentations or Apple presentations when he launched new products, he was a storyteller. And I think that's a great example of how telling a story is better than just presenting facts and numbers and things like that, right? So figure out what is the story you want to present and figure out the heart of your story. And as you build that story, as you build the focus of the presentation, think about, like, what is the purpose of the discussion? Is there a decision you're trying to reach? And make sure the story supports that discussion or that decision. And so if you're trying to get approval for your budget from your board, that's your end game. That's a decision you want to reach. Make sure the story and the slides provide supporting information to get to that decision. You don't want to go in there and have incomplete information because you haven't hit all the key points, so then your board can't decide. And in the same way, know your audience, right? So know where they're coming from and what's important to them. So as you think through what's important to kind of present and get to the decision, also think through what kind of board members you have. Do you have someone that loves the details or wants the proof behind the numbers? Then you're going to want to show proof points to show that why you think your proposed budget and there's some new initiatives can happen. And maybe you want to show some benchmarks from other nonprofits that you talk to that show that there's evidence that this could happen. Or you've done a special event before and the prior year's numbers show that you can do it again. Right? So those are things to include in that story if that's important to getting a decision or approval for your budget. The second thing you want to do is once you know your story, build out the slides to support your story. Oftentimes you'll find, you may put together, or you've been in a meeting where someone's put together a story that has no flow, or a PowerPoint that has no flow. And you're trying to figure out, like, what's the point here, where's it trying to go? And probably the reason that happened was the presenter may not have written out an outline or a storyboard. And this is a best practice we learn in grammar school, elementary, middle school. I think there's a reason for it, because when you begin to outline your key bullet points, it provides structure and keeps you disciplined to what you need to include and what's unnecessary or extraneous, right? So write out the outline, write out the flow of your story, and then build a PowerPoint slides or Word documents to support that story. Oftentimes what I do is I'll write my outline across the slide headers. So I may say slide 1, key point is this. Slide 2, key point is this. And that kind of keeps me on message. And in the same way, you want one idea or one message per slide. So you don't want to have too much information. And whatever you have in the body, whether it's a graph, a picture, a chart, words, like it should support that key message or the outline above. Okay? And then lastly, the last tip is tell the story behind the numbers. So don't copy entire Excel spreadsheets onto your slide. Instead, use the charts and the graphs I showed you before from your dashboard or from Excel or from QuickBooks that can show really the story behind the numbers. Because when you just show a chart or when you show a table of numbers, there's no story there. And your board member is their eyes are going to go wherever they want to go. And they'll start asking questions on a lot of things that you may not be relevant to the conversation. But if you start showing trend charts or highlighting key numbers or ratios, right? Like earlier you showed breakdowns of some of your key accounts on the revenue side, expense side. Then that begins to tell the story of your organization, the financials, and then you can kind of control the conversation to go where you want to go and talk about the important things on the table. And so we always say a picture says 1,000 words. So use pictures to show the story, to tell the story, and then put any detailed financials in the appendix or have it as a supporting handout for them to look at later if necessary. An example of kind of what a budget presentation will look like when you present to the board is something like this. At a really high level, here's the agenda, discussion topics, right? You want to talk about the budget process, give confidence in the process you've taken to get to where you are. And that just gives confidence to say, wow, Ron as the ED has thought through everything we need to get to where we are today. I trust the process. Now let's start talking about the summary and the numbers. You may want to do a quick look back at 2014. So just like we did on some of those pictures, show some of the key trends, some of the key breakdowns. And then do a refresher on your operating plan and what are some of the key highlights from the plan. Because again, remember the process is your plan feeds into your budget. So if you remember or help them remember the key points of the operating plan, because maybe it's been a quarter since you met, that'll help ground them to say, okay, now I'm going to present to you a summary of my budget, and the budget should reflect the plan. And so hopefully it should all tie together. Okay? The last two things I want to talk about before we wrap up are some bonus topics. We often have clients ask us, Ron, Jitasa, I built my budget. We seem to be like off our budget. Should I reforecast? And so that's always a good discussion to have. And typically we tell our clients that there's really two triggers on when you should reforecast. The first one is if there's a big change from an organizational standpoint. So like, is there something that's happened that's significant that will cause your numbers to no longer be accurate or reflective, right? So maybe you've had to go through, heaven forbid, some large layoffs, right? Then you're going to want to do a reforecast. Or maybe you got this really large new revenue stream, or you got blessings or go ahead for a new program to launch in the second quarter, right? So now you know that's going to be very different. Then it's good to maybe to estimate what that is, go through a similar process we went through earlier, and fold that into your budget. Another way to look at it too is if you have variances, you're always going to have variances. No one's perfect in this exercise, but if your variances are outside of what's acceptable, right? So what is your threshold for acceptability? 5%, 10%, that may be acceptable, but if you're missing it at 40%, 50%, begin to look at why you missed it and have a discussion. Should we do a reforecast because we're so off, it's no longer useful, right? And if you do that, go through the similar process we went through earlier in building out your reforecasted budget. And hopefully, because you've done it before, it should be a faster process and not as time-intensive for the reforecast. The second bonus topic is tracking your budget versus your actuals. I showed you through our dashboard how you can quickly track and see your budget versus your actuals. It's often a good best practice to, if you create your budget, upload your budget into your accounting system. Run your budget versus actuals report. Use it as a standard report in every accounting system. Run it each month. And then again, as we did for the exercise, focus on areas where it's a large percent of your budget or there's a significant variance month to month. And if possible, view it through a dashboard. I think it's always easier to look at it and analyze those things in a dashboard versus a financial statement. Okay. An example of that dashboard is what you see in front of you. You can tell here that it's quickly easy to see like what's happened month to month, and then which key categories are over and under budget. And the pictures, the colorings quickly lead your eye to areas you want to focus on. So for example, in this area, you know that income is $70,000 under budget for the year, but the big drivers for that are general giving, which is $77,000 over, income on investments or under, income on investments, which is $60,000 over, and then administrative support, which is $45,000 under, right? So if you look at those three categories, you can quickly probably build a better reforecast going forward without having to look at everything, all the minutiae and all the details, okay? I want to wrap up quickly on the last 5 minutes, just highlight kind of who we are for those that are interested, but then also highlight some of our HANO member benefits, and also a nice promotional offering related to the budget process for those that are attending the webinar. So we can wrap this up in 5 minutes, hopefully. I said before, I kind of shared about who we were. I mentioned that we're the largest finance and accounting services provider that's exclusive to nonprofits. So as we often say, Jitasa is more than just a bookkeeping or accounting firm. Instead, we are a full services finance and accounting provider for nonprofits at any stage. And we often say whether your nonprofit is a do-it-yourselfer and wants to keep things in-house and is looking for support, or whether you want to focus on what you do best and have someone take over your finance and accounting services or function, whether your nonprofit is just getting started and is going through the 501c3 process, whether they're building up your nonprofit organization, or whether you're trying to take things to the next level, we have a full suite of services for nonprofits regardless of your stage, your budget, or your preference. And so we often say in talking to any potential client or prospect or nonprofit, I'm fairly confident that we can come up with a service or a mix of services appropriate to where you are, and it's reflected in this picture in front of you. So whether you want support, whether you want someone to manage it for you, whether you want financial tools, or whether you want support in the incorporation process, as you can see in front of you, we have something that can help you at every stage, whether where you are today or going forward in the near future. Okay. I want to highlight our budget organizational consulting service. This is probably one of our more popular financial tools or financial analysis services we have for nonprofits. I think just last month we've done probably like, I think 10 budgets for nonprofits, one of our clients. And typically what we kind of go through is similar to what I kind of outlined to you earlier, is where you'll get assigned a financial analyst that's going to start with an analysis of your prior year numbers and show it through a dashboard. And then through a nice consulting process, we'll begin to ask questions and consult with you so we can understand your objective, what's changing, your puts and takes, and like from your operating plan, help you translate that to your budget. And what's nice about it is we actually build the budget for our nonprofit clients in that we go through, we put everything into our model, and then we review the details and the summaries with our clients, and we go through 2 rounds of revisions. So hopefully by the end, we have a budget that's reflective of their operating plan, what's changing, and there's buy-in on the numbers, and then they can then present that to the board for final review. And so it's a nice kind of painless way to go through a budgeting process without having to do all the heavy lifting. It's more you're working with us to make sure what's in your head is reflected in the model, the budget, and the numbers. And so we have very simple pricing for this, where if your nonprofit is under $200,000, we can do it for a flat fee of $500. If you're between $200,000 and $1 million, we can do it for $1,000. And if your operating budget or annual revenue is over $1 million, it's $1,500. So hopefully, if you're interested, I'll be sending an email as a follow-up to our webinar. Please reach out and let me know, and we'd be more than happy to reach out and begin that process. At the same time, we do want to offer a special free service for the webinar attendees, and it's really a nice HANO member benefit that we want to extend. So for anyone that's attending the webinar, what we want to offer you is a free one-time analysis of your current financials using our dashboard. So a lot of the screenshots we showed you before, we'll actually take your current year financials, put that into the dashboard, and then set up a console to walk you through your current numbers. And so we'll call out key categories, key variances. And as we discussed in the webinar, that's an important first step in the budgeting process. So, whether you want to use this for a consulting service or not, this would be a great kind of first step for you if you would like to help you build your budget, whether internally or if there's someone like us. The only caveat is it's limited to those that are on the QuickBooks accounting system. Our dashboard can actually plug into any accounting system, but just for something like this, it's just QuickBooks will kind of limit some of the variation we'll see across the nonprofits, but hopefully your books are in QuickBooks. And again, if you want to take advantage of this free service, please reply back to the email I'm going to send out, and you can sign up that way, and we'll reach out to you shortly for next steps. The last thing I want to call out is our HANO member benefits. We're proud to be a member benefit partner with HANO, and we have 2 ongoing member benefits, and then we always do like seasonal benefits such as webinars or promotions or things like that. So throughout the year, if you're a HANO member, you're eligible for 1 month free on our bookkeeping and accounting services if you were to sign up as a client. And that's if you want us to manage your books and accounting. Or if you just want support services, you want to do it yourself, but you're looking to us to help you and guide you along the way, we offer a 30-day free trial of our support center, and then 20% off for any ongoing support that you may purchase. You can always go to our Jitasa HANO page for more details. It's at www.jitasa.is/HANO. And there's also a link from the HANO website to our page as well. You can look at our member benefits, request a consult, find out more information, or just ask to be contacted by somebody for next steps. Okay? So that wraps things up. I'm going to be sending an email as a follow-up, and it'll have a link to the recording, a link to the PDF, and a reminder of some of the promotional items we have. If you want to contact me for any questions, whether it's to take advantage of the promotion, you're interested in our budget consulting service, or you want to find out more about member benefits, please reply back or just contact me via the information you see on the screen. My phone number and email address is listed in front of you. Okay, so I'll leave that up for the next few minutes, just in case you want to take that down. If not, again, I'll send an email as a recap later on tomorrow or the following day. Okay? Thanks, everyone. Mahalo.